You're watching Masters in Trading Live with Jonathan Rose.
Hello, my dear friends. It's Jonathan Rose from, I gotta fix my shirt here. Maybe button up a little bit. It's Jonathan Rose from Masters in Trading. We get on here every single day, 11 o'clock Eastern, to go over the market, share our thoughts. Today is a very, very exciting day because today we are releasing our second product of Masters in Trading. I'm going to tell you all about that. I got 4 topics to cover. The first topic, Enovix. I think in Masters in Trading's short history with their new corporate partners, this may be the biggest winner yet. I want to talk about the calendar. We are walking into July 4th. Very, very important. Oil hitting some very strong resistance. Let me show you why. Something you could potentially do about it. And then finally, I want to introduce you to Rainmaker season. That's right. Let's go to the charts. I'm excited about this one, guys. Enovix. So I want to start right here. Now, I'm not sure about you, but when we have good history with a name, we tend to stay with it. It's one of those things, if you trade Apple really well, if you get an opportunity to trade Apple, you're probably going to go do it. Well, Enovix, Enovix, is a name that I follow closely. And it's a name that we've shared before. I founded Masters in Trading back in 2015. But November 6th, ENVX, hey guys, December 12 for 60 cents. You can only risk $60. If you do 4 of them, it's $240 of risk. So we did this trade way, way back here, ENVX. And ENVX, this trade, 11.6, took about a month, but ended up working really, really well. That's when he said, hey guys, get out. So get into the pool, get out of the pool. Well, ENVX started to come up on our advanced notice unusual option activity tool. I was a market maker on the floor of the Chicago Board Options Exchange. Following unusual option activity is by far the most powerful indicator in the stock market, in the options market. We want to follow the biggest traders in the room. So when we started to see unusual options activity, June 13th, and we noticed ENVX, folks were coming in buying the October calls and buying the January calls. But what's so interesting about this, $2.5 million of out of the money trades. That's all premium. That's a really, 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 really big investment that we want to be aware of. So when we see something like that, I jumped on and I shared a trade idea. Hey guys, June 21st, consider buying the October 13 strike calls. We could do that for $207. One contract is $207. If you want to buy 10 contracts, it's $2,070. Well, ENVX shot up yesterday. And we were able to lock in on the portfolio, getting out of these at $550 for 165% gain. But it wasn't just me. ENVX, here's what I'm looking at right here. Very, very cool. ENVX yesterday, the highest that it went to was 25s. Now they've added some additional strikes. We do have some questions in Discord. Should somebody consider selling a higher strike to manage their trade? I don't think so. For anybody asking that question, I would stick with the trades that we shared yesterday. Here is my favorite feedback or testimonial from the ENVX trade. So I'm not sure exactly the name here, but just very, very cool. Jonathan, I want to say a big thank you. I started trading options in February. He's from Nigeria. I suffered more losses than gains following some other paid services. I found your free trades in April. mastersintrading.com/live underneath is a free trade portfolio, and signed up for advance notice in early in May. Today, from the gains in NVEX, I have fully recovered my subscription fee and also have a $300 profit to boot. I still have one contract open on ENVX. So congratulations Ide Oko Stevens, but we also have about 20 testimonials in our Discord of folks making over 100% in this ENVX trade. So I am thrilled for you. Appreciate it. Great job. Okay, this is really important, and some of you are not aware of this. So let's make it just straight up extremely obvious, because this lesson will save you money. Today is going to be June 6th. Okay? We have July 4th, markets closed. Wednesday is a half day. So really, markets closed. Because this Friday is after 2 days off, this is also going to be a crappy day. And Masters in Trading is going to be closed that day because it's that bad. There's really nothing to do. So common sense tells us we have 1 trading day. We have 2 trading days. We have 3 trading days and 4 trading days. Okay, so we have 4 trading days, guys, until July 4th weekend. Now, what you have to learn, or what you have to realize, is we have 4 trading days, right? But what are there? There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We have 11 days until we're open again. So the market, we can trade for 4 days. Options are going to decay over 11 days. What does that mean? That means, in straight up English, the only language I speak, do not buy options. We do not want to buy premium. We don't want to collect a whole bunch of premium today going into July 4th weekend. We don't want to initiate new positions buying a whole bunch of options. If a stock's at 10, you don't want to buy the 12 strike calls. 12 strike calls, it's fluff. What do I mean by fluff? If the stock's at 10, buying stock at 12, that out of the money stuff, it's fluff. It's not real. It's all going to decay. So what I want you to do, getting in front of the calendar, right now, we should be looking to reduce positions or not looking to add any long options because of this enormous decay that's on the calendar. I cannot stress this lesson enough. So now I'm going to talk about oil. Oil. Right now, because we're heading into July 4th, we're not looking to accumulate a ton of options. We talked about our line in the sand. The market's over the line in the sand. Volatility is real low. So what's going on? Well, here is the implied volatility of oil futures. And this is real time from where I took it. So this is a rise in volatility. This is falling in volatility. Right now, there's not much volatility in oil, but oil has traded right up to its implied move. So when it gets to these implied moves, most often we're going to need some kind of news. We're going to need some big event to get through major resistance or major support down here. So right now, I think oil is a little toppy. I think oil should pull back. What does that mean? If you're long oil stocks, maybe you want to take profit. Maybe you want to lower your exposure. Here's oil. If I look at oil using our expected move is just how the options are pricing expectations. So here, the options market is pricing in way more volatility than here. There's not a lot of volatility priced into the market because this range is fairly small, but notice CL getting to the top of its expected move. CL historically closes inside its expected move 91.67% of the time. We can find that information right here. So right now, traders, if you're looking for something to do, you may want to look to get short oil. You can do that in a variety of ways. An easy way is USO. USO, United States Oil ETF. You can get short that. You can consider selling upside calls. You could consider selling some downside puts. Here's my big announcement. Today we are releasing our Earnings Advantage promotion. It's called Rainmaker Season is Here. For everybody, go over right now to mastersintrading.com/earnings. Those who jump in right now, you guys will be the first to watch this brand new presentation that's been in the works for about 3 months. I am so excited that this has finally been released and all of you guys can get a chance to watch it. So again, guys, head over. It's mastersintrading.com/earnings to watch that new, fresh video. For everybody who's part of our All Access program, I have an idea about how we can play oil pulling back without buying options. How can we sell options to play for premium going lower, volatility going lower, but also oil trading little bit lower? That's what we're going to do on All Access, guys.